In today's show, Bitcoin was almost named Netcoin by Satoshi Nakamoto, hence domain data. That's right, check it out. A day before the Bitcoin.org domain was first registered, someone purchased netcoin.org using the same registrar. Looks like Satoshi was contemplating between the two names and later dropped netcoin.org. And quoting crypto analyst PlanB, Bitcoin held the crucial area around 18,500 and is now looking to break out of this range. Another test of 19,500 and we'll be good to go. Crucial barrier to hold, $18,500. We'll also be discussing the Bitcoin 4-year halving cycles, as well as the next Bitcoin halving potentially occurring in the fourth quarter of next year. And quoting Charles Edwards, the euro is at 20-year lows, yen 24-year lows, and pound 37-year lows. We're seeing the collapse of the Ponzi currencies into hard currencies. First, all fiats collapse into US dollars, then the US dollar into Bitcoin. And quoting Max Kaiser in El Salvador, we will pick the day to bury the IMF. Also in today's show, Lebanese people turn to crypto amid the country's financial collapse. As Max shares here, if you're having to hold up the bank just to get your own money, you know you're in a proof-of-stake system. So far, the Lebanese people lost over 90% of their purchasing power since late 2019. Bitcoin fixes this. Be your own bank. Also in today's show, BitMEX founder Arthur Hayes says Ethereum will definitely outperform Bitcoin and outlines the danger zone for the Bitcoin bulls. Quoting him here, as we watch the gyrations of the US dollar liquidity index and its impulse, the Bitcoin level that long should be worried about is 17,500. The most likely course of action is a retest of that low. Also in today's show, Bitcoin unlikely to massively break out in 2022, says crypto asset manager CoinShares. Also in today's show, Michael Saylor makes huge $10 trillion crypto price prediction. Quoting the Giga Chat here, the next logical stop for Bitcoin is to replace gold as a non-sovereign store value asset. Bitcoin is digital gold. It's 100 times better than gold. And if Bitcoin goes to the value of gold, it goes to $500,000 per Bitcoin. And speaking of bullish price predictions, I'll also be sharing the latest from PlanB, creator of the Bitcoin stock to flow model, who shares that Bitcoin will hit $100,000 to $1 million by 2025, which means 5x to 50x from the current price in the next 3 years. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So if you like receiving daily premium crypto news alerts every single day, including weekends just like this, make sure you're subscribed to the channel, hit that bell icon to turn on all notifications, Will Smith that like button, and drop a comment right down below as it helps out tremendously with the YouTube algorithm. And today's episode is brought to you by BlockFi, the #1 leading provider of financial products and services for crypto investors. Did you know you can get up to $1,000 in Bitcoin when you buy, sell, or trade crypto with BlockFi using my referral link in the description right down below? And another flagship product of theirs is their BlockFi Bitcoin Rewards Visa credit card, where you can get an unlimited 1.5% back in crypto on everything you buy. There are no annual fees, no foreign transaction fees, and you can see if you are approved with no impact to your credit score. So go ahead and use my referral link in the description right down below and claim your bonus of up to $1,000 in Bitcoin. And let's get this crypto, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and this is podcast episode number 1055 of the Crypto News Alerts pod. Now, coming up with a good name is often one of the most challenging decisions one needs to make when launching a new service or business. Historical data or domain purchases suggest that Satoshi Nakamoto, creator of Bitcoin, had an alternate naming option in mind that did not make it to the white paper. That's right, Bitcoin.org, the website domain linked to the original Bitcoin, was created on August 18th, 2008, under anonymous speech, a service in Japan that allows users to buy domain names anonymously. Domain purchases under anonymous speech around similar timelines revealed that the creation of netcoin.org on August 17, 2008, just a day prior to the creation of bitcoin.org, as pointed out here on Crypto Twitter. Did you know a day before the bitcoin.org domain was first registered, someone purchased netcoin.org using the same registrar? Looks like Satoshi was contemplating between the two names and later dropped netcoin.org. And he also adds, according to the Wayback Machine, no content was ever present on the netcoin.org domain except for only after it was purchased by another person later on. I've discovered this by looking at all the domains purchased around the same time by anonymous speech. It's truly amazing that you can still reveal new information on such a research subject. Now, the decision to stick with Bitcoin may have been crucial to its success due to the fact that numerous members of the crypto community highlighted their dislike for the name Netcoin. As one stated here, that's interesting. I'm glad they stuck with Bitcoin. Sounds way better better? Let me know if you agree or disagree in the comments below. Now, the finding further helps Bitcoin distance itself from people that have previously claimed to be Satoshi Nakamoto. The netcoin.org domain was later deleted and re-registered to a subsidiary of web.com in 2010. And despite the mysteries behind the creation of Bitcoin, the asset continues to dominate the financial markets. BitPay confirmed this notion, as his data showed Bitcoin to be a major payment tool despite the huge price volatility. And speaking of Cointelegraph, BitPay's vice president of marketing stated that the sales volume of Bitcoin-based payments on BitPay accounted for as much as 52% in the first quarter of 2022. And quoting Danny Scott of Coin Corner, Bitcoin 4-year cycles like clockwork. In 2013, Bitcoin soared 5,500%. In 2014, we dropped 58%. Then in 2015, we gained 35%, followed by in 2016, 125%, and in 2017, 1,331%, followed by a bear market in 2018, down 73%, followed by another bull run in 2019, up 95%, in 2020, up 301%, and in 2021, up 66%, followed by this year, currently down 58%. However, it's important we check out the pattern, as when we have a bear year, we're followed by 3 years in the green that are bullish. So let's freaking go. And as I pointed out recently, it is now believed that the next Bitcoin halving could occur as early as the fourth quarter of next year, perhaps up to 7 months sooner than previously expected. That's right, according to cryptonews.net, the date for the next Bitcoin halving has been pulled forward as the hash rate has hit a new all-time high. The Bitcoin hash rate hit a raw value of 281.79 million on September 11th, which indicates that more people are jumping on board. And this is the good sign for the health of the network. The halving date was expected sometime in May of 2024, but at the current levels, it is slated for the last quarter of 2023. And quoting Max Kaiser here, in El Salvador, we will pick the day to bury the IMF. And people are loving this on crypto Twitter. As you can see, 528 likes and 52 retweets. Let's go. And before I break down next story of the day, Lebanese people turn to crypto amid the country's financial collapse. But first, let's take a quick look at the overall crypto market. As you can see, most of the major cryptos are currently pumping back in the green. We got Bitcoin up 0.5% for the day, trading just above 19,100 at the time of this recording. We have Ether up almost 2% for the day, maintaining above 1,300, while Binance Coin, Polkadot, Solana, and Cardano are all breaking out and in the green, while XRP is finally pulling back and in the red. But all right, now let's break down our next story of the day. Some of the tech-savvy youngsters in Lebanon have reportedly shifted their focus towards cryptos amid the current monetary crash. Earlier this week, the government closed all local banks due to ongoing risk for employees and customers. It remains unknown when the financial institutions will reopen, which might be one reason why locals started looking for alternative financial instruments, including digital assets. The economic situation in Lebanon worsened after the government shut all domestic banking institutions until further notice. And don't think for a moment this can't happen in the United States. Just saying. Thus, people wanting to withdraw their funds can do so at a considerable loss or take out the US dollar denominated checks, which are then sold for a fraction of their valuation, currently approximately 20%. On the other hand, those willing to do something with their savings must act fast because the Lebanese pound is depreciating on a daily basis. Talk about hyperinflation. And according to a recent Reuters report, some locals, mainly the younger people with enough knowledge about innovations and technology, have started dealing with crypto such as Bitcoin because of this setback. Mario Awad, a Lebanese hodler, told the media that many politicians, security officers, TV personalities, and celebrities have also purchased Bitcoin or altcoins lately. And another individual, introducing himself as a mod, argued that cryptos are 100 times more real than the dollars Lebanese keep in the banks. Facts. And according to the coverage, the favorite digital asset of local investors is the world's largest stablecoin, Tether, USDT. Its value is pegged to the American dollar, and in theory, it should stay unaffected by the notorious volatility in the crypto market. And at this time, the Lebanese government has not yet put the digital asset sector under its supervision. However, due to the lack of regulations, this does not seem to be a problem for domestic investors, most of whom do not trust the actions of the ruling body. You can say that again. Quoting a trader here, for many, that's seen as a good because we're not living in a country where regulations and politicians give us hope. Quite the opposite, but it does harm widespread adoption of cryptocurrency. And it's worth noting that crypto mining also thrives in Lebanon, mainly due to the cheap electricity prices. And speaking on the matter was a local miner who disclosed himself as Jad. Quoting him here, even if you're making $10 a day with a normal computer, that's now several times the minimum wage. After what we've been through, I'm never putting 1 cent back in the Lebanese bank. And I don't blame him, as Max shares here. If you're having to hold up the bank just to get your own money, you know you're in a proof of stake system. As you can see, the Lebanese lost over 90% 95% of their purchasing power since late 2019. And as you can see, as a result, people are literally robbing the bank to try to get their money back. Lebanon has been battling a deep economic crisis for the past couple of decades. While the country was once one of the most well-developed states in the Arab region until 1975, a civil war that lasted until 1990 changed that trend. The military conflict caused massive loss of human life and property that devastated the country's financial system. Parts of Lebanon were left in ruins, while the leading political parties continued to divide society years after the end of the war. Sound familiar? Deja vu. And apart from seeking a peaceful environment for themselves and their families, those individuals also escaped a country where the financial network is barely functioning. The current inflation rate in Lebanon is over 160%, while the recently closed banks only intensified the issue. And the increased interest in cryptocurrencies displayed by locals because of the ongoing situation is not something new. Residents from other countries, including Argentina and Turkey, have also jumped on the crypto bandwagon due to worrying inflation rates or political turmoil. So there you have it. And before I break down next story of the day, BitMEX founder Arthur Hayes says Ethereum will definitely outperform Bitcoin and outlines the danger zone for the Bitcoin bulls. But first, let's take a quick look at the overall crypto market cap, sitting at about $943 billion with $73 billion in volume in the past 24 hours. The current Bitcoin dominance is 38.9%, with the Ether dominance at 17.4%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Shiba Inu leading the pack up 9.6%, still trading at virtually nothing, followed by Dogecoin up 8.5%, trading at 6.5 cents, followed by Quant up 7.5%, trading at $115. And checking out the top 100 cryptocurrency gainers for the past week, you can see XRP still leading the pack up 39.7%, followed by Algorand up 24.8%, followed by Chili's up 21.4%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated to 24 out of 100 in extreme fear, and we have been stuck in extreme fear, as you can see, for a very long time. But all right, now let's break down our next story of the day. BitMEX co-founder Arthur Hayes is highlighting a key support level that should concern traders and investors who have placed long positions on the King crypto. In a new blog post, Hayes says the Bitcoin bulls should be worried about the $17,500 price level, an area that marks the current bear market low for the King crypto. The former BitMEX CEO says the Bitcoin's performance will likely be determined by the US dollar liquidity index, a metric that tracks the quantity of US dollars in the system through the size of the Fed's balance sheet, Fed's reverse repo facility, and balance of the US Treasury general account with the New York Fed. Quoting Crypto Hayes here, as we watch the gyrations of the US dollar liquidity index and its impulse, the Bitcoin level that long should be worried about is $17,500. The most likely course of action is a retest of that low. Whether it holds the line or not is entirely dependent on the trajectory of the US dollar liquidity index's impulse. And according to Hayes, the Fed's commitment to reducing its balance sheet and the US Treasury's inclination to issue more debt to fund the government takes away liquidity from the system, which he notes does not bode well for BTC. And turning to Ethereum, Hayes says the second largest crypto asset by market cap will likely outperform Bitcoin. However, the crypto capitalist says Ethereum is unlikely to hit a price of at least $10,000 as he had previously predicted this year if the monetary tightening continues in the US. Quoting him again here, I remain confident that the structural reduction in the supply of ETH will definitely lead to an outperformance against Bitcoin, but if the Fed and Treasury continue with their USD liquidity reduction plans, I have little confidence in ETH's ability to get to 5 ducking digits by year's end. So there you have it. Let me know if you agree or disagree with Crypto Hayes. And before I break down next story of the day, Bitcoin unlikely to massively break out in 2022, says crypto asset manager CoinShares, as well as I share Michael Saylor's huge $10 trillion crypto price prediction, as well as PlanB's $100 to $1 million price prediction within the next 3 years. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. And if you're not already subscribed to the channel, you know what to do. Hit that bell icon, turn on all notifications, Will Smith that like button, and drop a comment below, as it helps out tremendously with the YouTube algorithm. But all right, now let's break down our next story of the day. Digital asset manager CoinShares says Bitcoin is not likely to see a big impulse to the upside for at least the remainder of this year. That's right. In a new bi-weekly report, CoinShares says that the US dollar currency index, which pits the US dollar against a basket of other fiat currencies, may have more gas left in the tank of its multi-month rally, and a high DXY usually implies downward pressure on most risk assets like Bitcoin. Bitcoin, quoting him here, the DXY looks overpriced but could appreciate further in the near term. While the prospect for a recession is far from conclusive, it looks as if the monetary policy terminal rate, which will peak in the US before it does in its key trading partners, this coupled with the likeliness of a weaker economic data in the US, suggests the DXY is likely to peak towards the end of the year. And due to Bitcoin's prices being highly inversely correlated to the DXY, Bitcoin prices are unlikely to have a significant upside breakout this year unless we see an unexpected deterioration in macroeconomic data. So there you have it. The leading crypto asset manager says that a reversal in hawkish monetary policy from the Fed is unlikely anytime soon, which is an additional weight on the King Crypto. Quoting him again here, it is clear for now at least that the US Federal Reserve is not about to pivot to a softer monetary policy stance as many have expected at the recent Jackson Hole event. This had an immediate effect on the US dollar and interest rate sensitive assets such as equities and Bitcoin. The hawkish rhetoric from the Fed is likely to have a continued dampening effect on the Bitcoin price outlook until their perception of macroeconomic data justifies a pivot. Now, CoinShares forecast continued pressure on Bitcoin unless some type of unexpected deterioration in macroeconomic data shows up. So there you have it. But all right, now let's break down our final story of the day. Bitcoin has swung wildly this week as traders brace themselves for a Fed sledgehammer that can trigger a crash worse than 2008. The Bitcoin price crashed back under 20,000 per Bitcoin after trying to climb above that critical psychological level earlier this month, pushed lower by a surprise Biden admin warning. And now Michael Saylor, the chairman and co-founder of the software company MicroStrategy, who was the first publicly traded company to put Bitcoin on its balance sheet, has predicted the value of Bitcoin will overtake gold within 10 years, potentially giving Bitcoin a $500,000 price and a market cap of $10 trillion. Let's freaking go. Quoting the Giga Chat here, the next logical stop for Bitcoin is to replace gold as a non-sovereign store value asset, he told MarketWatch this week, adding that gold is a $10 trillion asset. And he says, Bitcoin is digital gold. It's 100 times better than gold. And if Bitcoin goes to the value of gold, it goes to $500,000 per Bitcoin. And without naming an exact date, Saylor said he expects that to happen within the next 10 years, predicting that Bitcoin will institutionalize, first regaining its position as a $1 trillion asset before exploding to $10 trillion. And in recent months, the world's largest asset manager, BlackRock, opened the floodgates for institutional access to Bitcoin, and investment giant Fidelity is reportedly weighing offering Bitcoin trading services to its 34.4 million retail investor base. Mass Bitcoin adoption, let's freaking go. However, Saylor warned he doesn't have a short-term price prediction, saying he has no idea what the Bitcoin price will be 12 months from now, but noting the extreme price volatility across all asset classes due to the Fed's monetary tightening policy, the Bitcoin price has touched 20,000 per Bitcoin a few times. I think this is stable, Saylor said, pointing to the Bitcoin price's moving average over 4 years for a potential bottom. So there you have it. What are your thoughts surrounding Michael Saylor's $500,000 Bitcoin price prediction with the Bitcoin market cap hitting $10 trillion and overtaking gold? Let me know in the comments below. Now sharing the latest from PlanB, creator of the Bitcoin stock to flow model. He recently tweeted, in my opinion, 2024 halving will, again and in line with the stock to flow, have a big lagged for front run impact on Bitcoin. My prediction, Bitcoin will be $100 to $1 million in 2025, which you can see here in the yellow square, 5x to 50x from the current $19,000 price over the next 3 years. This forecast is not accurate, but better roughly right than precisely wrong. So there you have it. Let me know if you agree or disagree with PlanB and his bullish price prediction of a $100,000 to $1 million Bitcoin price by the year 2025, which is within the next 3 years. Now for the top 3 comments from yesterday's episode, Pezza wrote, you have a headache with gold. You would want physical gold, then it has to be stored safely, guarded, etc. All very time consuming and expensive. The blockchain is far more secure. It's a no-brainer. You can walk across a border with your Bitcoin in your head, passphrase. You wouldn't want to do that with gold. Clank, clank. Anything to declare, sir? So there you have it. You make a great point. Our next featured comment comes from Sailing with Twins. Hey JV, once again, it's a pleasure listening to you, buddy. Keep up the excellent work, accumulating all the right news for us. One love. I think the next trigger might be the amount of new money coming into crypto and more people trusting crypto than fiat currency. Much love, fam. As always, I appreciate your continued support. And our third and final featured comment comes from Urson. Every time I hear smash to Will Smith, laugh to myself, JV, you are a legend. One love, fam. And to be featured on tomorrow's episode, simply drop a comment right down below. If you're not already subscribed, you know what to do. Hit that bell icon, turn on all notifications. Will Smith, that like button like never before. And I look forward to seeing you on tomorrow's episode. Peace.